Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today is your weekly update for realtors and industry professionals for September 22nd, 2023. Well, the Fed did not increase their rate on Wednesday. We anticipated that. The mortgage industry hedged for that, but apparently not enough. Because after they announced no increase in rates, rates actually went up for mortgage-backed securities. Well, they went up for a few reasons, but I want to show you two charts. Chart one on my right-hand side is going to be the 10-year Treasury. And in the 10-year Treasury, you're going to see that it constantly goes up. You see this nice upward trend. Yesterday, it actually spiked, and today it came down just a little bit. On my left shoulder, I'm going to take the MBS chart. I'm going to flip it upside down. That way it's easier for you to read. And if you see on the MBS chart on my left side, it goes up, but it kind of flattens out, doesn't go up as much. Well, right now, the MBS curve is as high as it was last August and as high as it was the previous October. So you have it, the rates went up through October and down through the summer, and then August they came back up and then down and then back up again. So you'll notice it goes up, down, up, and then up. But that nice, I not want to call it nice, but if you notice it maxes out at roughly the same area or the same payout or the same rate. Well, what does that do for rates? Well, a lot of it's situational dependent, right? Interest rate, it depends on credit score, down payment, there's a few things. So for example, on conventional, if you put 25% down, you're gonna have a better rate than 20. Most people don't know that, but if you put 20% down, your rate's actually worse than 15. But 25 is better, 30 is better, and if you put 50% down, sometimes you're 1/4% better than you were at 30% down. So it just kind of depends. On the government side, credit score dictates pretty much everything. So if you're really high on the credit score, you're pretty good on the rates. So right now, today, Govy is mid-6s without origination or discount, right? And if you did 1 point or so, somewhere in there, you're in the low 6s. Conventional is low 7s, and with 1 point roughly or so, then you're in the middle. Right at 7 or so. So you go from low 7s down to right at 7 or high 6s. But with that being said, even with that showing in the charts, I locked one yesterday at 6.3 on Govy with no points or origination. So some investors, for some situations and some scenarios, are going to price out substantially better. Now, if you look at our website, lcmloans.com, we have a little link there. It says interest rates. You can price out your scenario. One thing you need to know is whatever you price out in that scenario, our website's going to show a rate that's slightly higher, right? Our email is going to show a rate that's slightly higher. And the reason we do that is we're posting rates all over the place. And you can actually go search rates. You can search your scenario. Well, to make sure we're compliant with regulators, we're going to make sure it's rounded up an eighth or so, depending on the scenario. That way we're not caught, we don't get in trouble for showing a rate that's artificially low. Well, what's nice about that is even our rounded up rates are substantially better than other people's rounded down rates or manipulated rates. And what I say by manipulated rate is when you see a rate from us, we don't have origination or discount points in it. When you see a rate from most other lenders, there's going to be a point of origination or discount in that rate. And usually we're still beating that rate. So it's kind of nice being in that position. But anyways, my name is Mike Florin. Have a great day, have a great week, and I'll talk to you later.